So, why is the market taking a dive? Well, for the second time this week, the Federal Reserve has rattled the psyche of investors. St. Louis Fed President Bullard, who's often viewed as a dove on policy, surprised the markets on Friday. Bullard was on CNBC and said he thinks it's natural that we've tilted a little bit more hawkish to contain inflationary pressures as the economy sees improvement. And with that statement, the markets were doomed for the day as all major indices were in the red. And this statement comes just 2 days after the Fed caught the attention of investors with the potential for two rate hikes by the end of 2023. And one more thing. Did you all notice that Bullard didn't say anything about transitory inflation? It was inflationary pressure. So we've known that. And it seems that Wall Street traders are preparing for volatility. So what do the charts say? Well, the charts say something interesting. Basically, the Dow and the S&P 500 say that we're having a typical pullback, at least for now. But the Nasdaq and the Russell say that the rotation away from growth and into value may be switching back in favor of growth once again soon. So with that, let's take a look at the charts. And today we're going to look at two charts beginning here with the 2-year weekly on the SPDR's Dow Jones Industrial Average ETF, and the symbol is DIA, or the diamonds. And this chart here for the Dow is very similar to the S&P 500. And when we go to take a look at the Nasdaq, you'll see the differences, and you'll also see my thesis play out. Looking here at this chart, more or less we've been looking at a bottom trend line and an upper trend line through a channel. My lines are not perfect. They're not straight, but you kind of get the idea. We're heading on down here. We're just riding above the 20 EMA, and this may come down further, and it might even go below my trend line, perhaps even as low as the 50 EMA. But I don't really think that we're having a serious decline or crash. I think we're just having a typical pullback. Moving here into the volume, you see that the volume has kind of declined all through here, which is not necessarily bad, at least toward the end when you're having a sell-off. But we'll see how things go next week. And here into the MAC, you can see that the fast line has pierced through the slow line. I think this is the most that we've seen since all the way back there in early 2020. So there is potential that this could get worse depending upon what happens in the economy, in the press, in the media, the politicians, or whatever. But for now, it doesn't look like anything more than a typical pullback. But I would say just save your cash for the opportunities that may arise. Into the histogram, it shows what's going on pretty good, but not much different than what the MAC showed. Here, price rate of change. This really isn't any different than some of the sawtoothing that we've seen before, and we're above that zero line, so we still have strength. I don't think that's anything unusual. Here into the RSI, we've come all the way down. We're under the 50 line. We're at 45.41, so it's relatively weak, but we've seen that before here. And of course, down here, hopefully it doesn't turn into something like that. Hopefully it's just a typical pullback as we saw in this time frame here. Moving into the stochastics, pretty much the same thing. I would imagine that this is going to come on down, but hopefully we'll get a bounce above that 50 line and then continue on. Into the Williams, that shows it's into the oversold territory, and hopefully that's just going to be a spike. This oscillator often leads the other oscillators, so watch to see what that does. Hopefully it's just going to do a spike down and then back up. So back up here to the price chart. One last look at that, and then we're going to go take a look at the Nasdaq, and you'll see the differences. And we're now looking at the 2-year weekly on the Invesco Triple Q Trust, and the symbol is Triple Q, and this serves as a pretty good proxy for the Nasdaq. And this also has a channel line moving up through there like that, and then the top channel line moving through like that. Now, the differences that we have in the S&P and the Nasdaq is that this point here, we didn't reach the top of the channel line, and we certainly haven't reached it there. So some would take a look at this and see perhaps the triple top, 1, 2, 3. What I see, of course, is a triple top, but I see that straight line, but I see the underlying move in this direction continuing on up. Now, it's creating a pennant, and oftentimes what happens is the cycle gets tighter and tighter and tighter, and then it gets this sort of kinetic energy and pops in one direction or the other. And I'm thinking we may get a reflection back down here, but I think we're going to get a pop in an upward fashion. So I'll show you why in a second. Here we take a look at volume. Volume is also in a declining fashion here, and that's not really too bad. And you can see here in the MAC that that's also declining. So we have the divergence in the declining MAC versus the market that's been going straight. And I think it's going to go up if the fast line is able to pop through here on the slow line. This is at a level well above the zero. We're near 10. Now, it's possible because of the recent news and maybe some mouth flapping next week that we'll get a reflection back down in the fast line and the market goes down a bit. But I think it's going to gather steam and ultimately make a move on up through the slow line, the fast line moving through the slow line. And with the elevation that we have, that's pretty good strength, and we could have a pretty good rally in the growth stocks. And the growth stocks are generally made up of stocks in the Nasdaq as well as in the Russell. And here in the histogram, you can see pretty much the same thing. You have the upward trend line. So I think pressures are moving on up as opposed to on the downside. We've been moving on the downside way back there, since way back there. And you can see this is also moving through a channel, more or less like that. That's not a straight line, but you get the idea. Into the relative strength, this whole time we've been able to stay above this 50 line all the way through here, and we've stayed within this range for the most part through here, while the price chart has moved up. So that's a pretty comfortable level to be at. So I think things are fine for now. Into the stochastics, they look okay, as well as the Williams is just fine, moving on all cylinders, in my humble opinion. And I think there's going to be a fake out for many in the market seeing this triple top, and maybe we're going to take a tumble. I don't think so. Now, I think the probabilities are that sooner or later we're going to break up and through. I can't say next week or the week after because of things in the media right now. So it may take some time, but I would bide your time and be patient. And that's what I think the probabilities are, at least for the growth stocks. And that's why I think we're going to be switching from value to growth here soon. But some of the value stocks, like the oils, are still a wonderful place to be in. So just hang tight and be patient. And for today, that's ChewDog Charts. Thank you.